Assalamu alaikum. Welcome to question 4 of ATX revision kit. So before you come for this video, I'm assuming you have gone through the exhibits, you have gone through the requirements. Okay, so let me brief you about this case study without going in depth and reading line by line. Okay, this is a section A question and it has multi-tax, it's a multi-tax question. Okay, it is covering income tax, it is covering your national insurance payment. This is for a new sole trader. Okay, and also about VAT registration. Then we have capital gain tax, inheritance tax, and also it is testing your overseas aspect, the resident, UK resident, then UK domicile. Okay, the overseas aspect. So all the various areas are tested on this one single question. Okay, now directly we are going to go to the requirements. Here we have 4 exhibits. Last exhibit will give you the requirements that you have to do, and the remaining 3 exhibits will tell you what you have to do. Okay, so we are going to go through the requirements first from exhibit 4. Here we have to make a memo and it has various issues. So part A, part B, C, D, there are 4 issues that needs to be covered in this memo, and they have clearly mentioned which exhibit to use. So for your requirement A, you need exhibit 1, B, you need exhibit 2, and here you need exhibit 3 for both. One ethics question will come, and this is your ethical question, which is worth 5 marks. This is a 50 marks question, 40 is technical and 10 is your professional skill marks. Okay, so as we go through this, I will also show you how you can get your professional skill marks along. Okay, now what you need to do, as you can see, this is for 11 marks and this is for 5 marks. Okay, so for 11 marks this 2 comes and this 2 are for 5 marks. In A, this is about rain. Okay, you have to calculate income tax and NIC from this date to this date. So you should take this date into consideration. You should not extend beyond. Okay, and the days on which they will be payable. That's why you have to know when your income tax and NICs will be paid. Okay, next, he is going to withdraw, not going to withdraw all of the profit, rather he is going to reinvest that profit either by increasing his inventory level or by acquiring additional equipment. Okay, you are asked how this will affect his taxable income. Okay, next, this is about incurring input tax and VAT question. So he is incurring input tax and considering registering voluntarily for VAT. See, they didn't ask you the pros of registering voluntarily for VAT. The requirement is set out the information that you need in order to advise him whether or not this is possible or not, and explain why the information is needed. With that, explain whether Ray can recover the input tax or not for the computer purchased on this date if he registers for VAT. Now, coming to B. If you can recall A is mostly your tax knowledge. Okay, income tax, NIC, VAT, then how inventory level, additional equipment will affect taxable income. All these are knowledge of your tax. Now, coming to B. These two are worth 10 marks and this alone is worth 5 marks. Okay, you have to calculate capital. Calculate capital gain tax. This is regarding a gift from Shanira to Ray, the husband wife. Okay, so gain in respect of gift of the house, and not only that, you also need to see whether they need any further information or not. and also the due date of payment. Three things they are asking in one. Next, you have to explain with some calculations on when the further gift should be made to Roy. Okay, see, the examiner has given you a hint. They've helped you here by saying objective is to maximize your capital gain tax, raise capital gain tax base, and minimize the capital gain tax liability of Shanira. Okay, so in order to achieve this objective, you should consider dividing the gift of shares into two gifts on different days. They have already told you, given you a hint. So on two dates. What are the two dates? Before and after marriage. Which gift has to be given before marriage and which is to be given after marriage? This is for shares. And also other gifts. 10 marks. Next, maximum possible inheritance tax. Okay, in respect of the two gifts. In the respect of the proposed gift, one gift was painting, one is shares. Okay, if she was to follow the advice in respect of a timing, this is from this part. Okay, that means you have to do this part first before you come to the last part. You need it. So if you are following that timing, let's say you have decided you will go before marriage, same thing will come forward here. So based on that, what is your maximum possible inheritance tax liability? Okay, together with the circumstance in which this liability would occur. It's a long thing to do, but you need to break this into uh, small steps. Coming to C, this is overseas. Okay, so you have to, this is an email from Kelly that you have got in exhibit 3 and you have to give explanation. So we have to go to exhibit 3 for that. And 4, three things you have to explain: tax planning, tax avoidance, tax evasion. You have to explain the difference between these three and the actions. Explain the actions that Kelly has been offered. Okay, actions which we should take as a tax advisor, you have to take. So this is ethics. Okay, so now we'll move on to part A. I have not copy pasted the uh, examiner's report for you here. Okay, but some key answer tips I would like to tell on the first one, part A. How are you going to approach this? Okay, so you need, see, this is a unincorporated business. Okay, unincorporated means sole trader. Which type of NIC does sole trader pay? Please pay attention. This is not an employee. Class 2 and class 4. So they pay class 2 and class 4 NIC. And of course, the income tax, basic income tax. Okay, so you need 3: income tax, class 2 NIC, class 4 NIC. Okay, now you have been given the income tax already. Income tax has been given to you already, so do not waste your time to calculate that again. Where is it given? In exhibit 1. They have given you the profit for 2 tax years and they have given you the income tax. Okay, and also they have told you trading profits are calculated on accrual basis rather than cash basis. This you need it later on. Okay, and when did, so now you have been given the income tax. So all you need to do is calculate class 2 and class 4 NIC. This is pure your tax knowledge. Okay, so now one thing, this is a, you have to see whether you are a sole trader who is going to exit the business, a new sole trader, or a continuing sole trader. You are a new sole trader. You've just started a business. Earlier you were employed till this date, receiving a salary of 15,000. Okay, so the whole of my income tax is always being settled via tax deducted as source. Now you began trading on this date, 24/25. You have purchased a computer on this date. which you have used for both business and personally, but you're not registered for VAT yet. Okay, so now because you're in your business, this will be payment on account, not tax deducted at source. You have to pay on account. Same with the class NICs, which NIC? Class 2 and class 4 NICs are paid at different dates. You have to know the dates. Okay, so now we'll quickly go to do that. Okay, remember they told you a memo, so you have to prepare a memo to get the communication skill marks. Okay, now so here I have the answer for you. So you see, this is the format of memo. Memorize it. First you write who are the clients, Ray and Shanira. Okay, we are not having Kelly because Kelly comes in part C. Okay, what should be the subject? If you can't decide on subject, since there are various things, inheritance tax, capital gain tax, VAT, income tax, NIC, then do not write everything, just write various personal tax matter. Keep this as a subject always. Even in your exam you can use it. Prepared by whom? You can always write tax senior or advisor. That's you, and the date is given on your exam date. The first line itself they will give you that today is this date. Now you need to start with part A, first part of A. They have not given AI, but when you go to exhibit 4, okay, the first one you will take as I, this one as second part of A, this one as third, and this one as fourth. I'm sorry, take this as this both as first part, this is second part, because this together are 5 and this both are 11 marks. Okay, so here itself you can get your subheading from here itself, from your exhibit 4, the requirement, just copy paste in your word when you're going to type it. Okay, so here this is how the structure will look like. What is it? Unincorporated business. Always write the subheading in bold. What are you going to calculate? Tax and NIC. Income tax and class 4 NIC. You have to, they will go together. Why income tax and class 2 NIC? They will go together. You will pay them on the same day, payment on account. And class 2 NIC, separately you will do. And because they are payable on one single date, they are not payable on account. They are paid on 31st Jan following the end of the tax year. So for example, 24-25, it ending is 25th, right? 5th April 25. So the following Jan will be 31st Jan 26. Same for this one. So this will be payable on 31st Jan 26. On this date, this will be payable on 31st Jan 27. They are separate from class 4 and income tax. Class 4 NIC and income tax are paid on a payment on account. So you keep them together like this, and class 2 NIC together. First we'll calculate class 2 NIC because it's easier. Okay. See, in 24-25, they have only worked for how many months? It is a weekly contribution. Okay. And this is fixed. If you see class 2 NIC, they will give you in the table is 3.45 into 52 weeks into 10/12 because you have to apportion for 10 months. How 10 months? When did they start trading? They have started trading on 1st June. So it's from 1st June to March you have to take. April will not be counted. The whole month of April will not be counted. So June, July, August, September, October, November, December, January, February, March, 10 months. Okay, not the whole 12 months. So it's just 10 months. 150. And for the next, it is just 3.45 into 52. That's it. For the whole year, 179. This will be payable on 31st and 26th. Remember, you have to give this date. These dates are very important. If you don't give, you are going to lose marks. Now coming back to our table, income tax has been calculated, only class 4 NIC you have to calculate. And wherever you have a working, write working next to it like this, working. Okay, and write the dates. This is payment on account. So from 25, 26. When is the payment on account? First payment on account will be 31st and 26 for 24, 25. Next payment on account is 31st July and the last one is 31st Jan 27. You can't go beyond this date because the question told you till this date to this date, from 31st up to 31st March 27. That's why you can't go to 31st July 27. There's a limit to that. That's why only these 3 dates. So now first we'll calculate. We'll go to the working and we'll see how it is done. Okay. Income tax as per schedule you have been given for this year. Take it from the question. Class for NIC, you have to see your taxable income. It is this. Now it's 46,000. Okay, for that year. Remember, when we are having two different dates, date has to be kept separately. Earlier year first and later year later. So if we are in 24-25, trading taxable income was 46. Deduct the lower threshold and into 9%. This is how you calculate class 4 NIC and add it with income tax. So this is your total. 9695, it goes here. This 50% you will pay as first payment on account. That's why half of it. Next payment will be same. You see, if this is 8, you can't keep it 8 here because if you add this 2, it has to be 9695. Round up figure. Okay. So it is 7 to make it 9695. Doesn't matter. So first and second. Now coming to this one. Balancing payment. The last one is known as balancing payment. Okay. So now there is a working for it. Come here. Income tax already they have given you. On that, this was your taxable income, 66,000. You see 66,000. And this was your income tax. So 66,000 is above the upper threshold also. Therefore, first this is the threshold, 50 minus 270 minus this at 9%. The excess 66 over the upper limit will be at 2%. Add this and add it with income tax. This is the total. Okay. So from 17,540, you deduct this one. It is this, and half of it you will pay as a first payment on account on this date. That is this. Okay. It is half of 17,540 that you are going to pay here. Second payment on account for this 17,540 is not needed because it will be paid 31st July. The date told you till 31st March 2027. Till this, and this date falls before that. That's why you have to stop here. Okay. And when it comes to balancing payment, it is just the difference between this amount payable and the second one. So 7845. And also on that date, first payment on account for this date will start here. Now, so it's done. And now so that's done. You have calculated income tax is there, class 2, 4 NIC are done. Now the next one. The next one is increasing inventory or acquiring additional equipment, the effect. This you have to write it in bold, it's a subheading. Okay. Please focus on the subheadings because it's not only on the answers that we are concentrating. We need to know the structure of the answer is very important. Okay. So now, if you see this question is not necessarily seen in your exam. It's not very frequent. This is something which is new and you need to logically think about it. You must have not seen this in the past paper. If every year some part of the question you will always get which is new to you, which you have never seen before. You have to be prepared for that type of question as well. Okay. So now let's go to that. So now drawings for the sole trade are not tax deductible. Okay, you have to know drawings are not sold. So whatever the drawings you take, it is all going to be taxed on your taxable trading profit. A sole trader will be taxed on all of the taxable trading profit, doesn't matter how much drawings you take out of it. There is no advantage of having drawings. It's not going to reduce your tax. Okay. So you can do this question in spreadsheet, and because you can use formulas over there, which you can quickly do it, but you can reference your workings in your explanation in the word processor. Okay. Now, how are you going to answer this question? So, see, the answers in highlighted ones are the ones which needs to be there in your answer. Okay. First of all, you have to tell about drawings. When you withdraw the profit, what is the impact? That is this first paragraph. First you start with that, then we'll come to equipment and inventory level. So second para, it's about equipment. Third one is about inventory. And next one you are talking about cash basis and accrual basis. You need this information in your answer. So four things. Whether withdrawing of profit is going to have an impact, then equipment, then inventory and cash or accrual basis. So here, regardless of your drawings, they will be subject to income tax on his tax adjusted trading profit. Whether he withdraws the profit from the business or not. That's the one point. Next, we are coming to the equipment. So when you are taking an equipment, what happens? This will be deducted from his tax adjusted trading profit. Why? Because he's going to get 100% annual investment allowance. 100%. If you're very well, if you have the knowledge of AIA, capital allowance, equipment, it's a plant and equipment, plant and machinery, you're going to have 100% AIA in the first year. So if anything you are buying of equipment, you can deduct it from your tax. So if you are using it in this way, you can reduce the raised taxable trading profit. Okay. Next, coming to inventory. This part is not done very well, so pay careful attention to this. Here, see, that's why I told you, every piece of information is important. They have told somewhere that it's on accrual basis, not cash basis, right? So profits are calculated on accrual basis. Because it's calculated on accrual basis, when you increase the inventory, it's not going to have an immediate effect. This is what most of the students missed out. It's not going to have any immediate effect on your tax adjusted trading profit. Why? If you increase the purchase, it will be cancelled out automatically by the increase in closing level of inventory. So this will not reduce their taxable income. But if you're using a cash basis instead, then you are going to have something for the cost of inventory. Then there's an immediate tax deduction. You can deduct it from profit. Now moving on to the second part, that's VAT. So first part of VAT is information that is required for voluntary registration. Okay. So now, if you see, there are two things. First one, which information you need? One is nature of good and service. The other one is extent to which the customers are registered for VAT. Two things. You have to explain also. First line you will write. See, this is what you are identifying the point. Second para you are explaining. First point you are identifying the point. Second para you are explaining. This should be your approach. First information you need is nature of goods and services. Why? Because if you are only making exempt supply, you can't register for VAT. You have to make some taxable supply for you to voluntarily register for VAT. Number two, for you to get the benefit of VAT, registration of VAT, your customers also has to be registered for VAT. If your customers are not registered for VAT, okay, there's a price increase for them. So even if you are recovering your input tax, it is not sufficient for you to meet. You will not be able to compensate it with the loss of the output tax from your customer. Customers will not buy from you. They will go to someone else who are not registered for VAT, because for them, then you are charging your goods on a standard rate. To the customers who are not registered for VAT also, you can claim import tax, but on the other hand, disadvantages are you are losing customer who are not registered for VAT. So these two things. Now, can you recover the input tax regarding computer? That was the next requirement, right? This is, most of you have missed out that it's a pre-registration expenditure, right? So before you are registering for VAT, you can recover the input tax 4 years before you register for VAT. Any input tax you have incurred, you can recover. This is regarding goods. Okay. But those goods have to be still owned by you at the date of registration. But the proportion of input tax that you recover depends on how much you have used the computer for business. The personal use percentage you can't claim. Okay. So you have answered part A completely. Now we are moving on to B, where we have to calculate capital gain tax. Okay. So now dates are very important. Okay. If you see the gift of house, it has already taken place in this tax year. And today is 1st July 2024. This is after this tax year. So you can't make any further gift on this tax year. Any further gift that you have to make will arise in this tax year and later onwards. Okay. And if you, and make sure that you discuss any missing information also. This will show that you are applying your professional skepticism skill. This is how you get your professional skepticism skill. So first we'll talk about the house in another country, Hallucia. So here, if you read Hallucia, Exhibit 2. So Exhibit 1 I've completely finished. Okay. Now I'm in Exhibit 2. So on 1st of Feb, Raw gave a house gift from Shanira to Ray. Ray was given a house from Shanira. The house was valued at 360, was bought at 280. Okay, and the rest all is painting and shares, but first we'll finish with the house. Okay, and here Shanira is a high rate taxpayer. Gift of the house was made on this date, and this was her first lifetime gift. And she did not make any other charitable disposal since this date. There is no capital gain tax treaty in the country of Heliosia. There is a capital gain tax in the country of Heliosia, but no inheritance tax. And there is no double tax treaty between Heliosia and UK. So from the value and the cost, we can find out the gain in the house. Okay. Since they have not given us any information regarding how much they stayed occupied, we don't have to calculate the PPE, principal private relief, principal residence relief. Okay. So just calculate the value and the cost and get the gain. This is the gain 80,000. Remember, high rate taxpayer, so it's a residential, so 28%. Okay. And from this 80, you have to deduct the annual exemption. From this 80, you have to deduct 6,000. 6,000 is the annual exemption amount. Do not forget that. This is CGT. And then take 28% because high rate taxpayer. So this is the CGT. Now, this could be further reduced by double tax relief if you have paid any CGT in Heliosia. Okay. So in order to see, we are talking about missing information, right? We don't have the information. So you can say we need information about the CGT that is payable in Heliosia. We need that information here. That was not given to you. So you can mention that. By mention, you are going to get your professional skepticism skill. Next, the due date they asked you. When is the due date? This is CGT. And it is 23/24, the date. So it will be 31st Jan 2025. The UK CGT will be payable on this date. The dates are always written at the end after you do your calculation and calculate CGT. So first you calculate your CGT, first para. Second, you talk about missing information, like how much you paid in Heliosia, and third is the date of payment. This is regarding only house. Coming to the next gift. So the next gift are the paintings. One is painting, the other one is shares. We are going to talk about them separately. Okay. So now these are some tutor top tips which will help you. They are not part of your answer. When you are giving a gift, you have to consider after the wedding or before the wedding. If it's after the wedding, remember it is between the spouses, you are going to get exempted. Any transfer will be at no gain, no loss. So the base cost for the donee will be the original cost of the donor. Gift before the wedding will be at market value. There will be a gain or a loss. And the base cost for the donee will be the market value. Okay. So now, that's what you have to talk about here first. First, you have to start about before the wedding, what is the situation, after the wedding, what will be the situation. Then we'll talk about painting and shares. Okay, so before the wedding, disposal will be at market value. It will give rise to gain or loss. After the wedding, no chargeable gain or allowable loss. Instead, the assets will be transferred amount equal to the disposal CGT base cost. Writing this much is important. You're going to get marks and it's needed. Okay. Now, so now what you need? Painting. So let's start with the painting. If you see the painting here, It's in exhibit 2. Just read about painting is enough. You have purchased it for 15, but the current market value is 7. That's, you purchased it more than its value. That means it's at loss. 8,000 is the loss of the painting. So since 8,000 is at loss, tell me whether it is better to give it before the gift or after the gift, after the marriage. Specifically, we are talking about paintings only. See, this is at a loss of 8,000, capital loss. Give it before wedding, because before wedding you are going to have a gain or a loss. So your gain will be utilized by this capital loss of 8,000. Okay. Now, but remember one thing: if you are giving it, the CGT base cost for the ray will be 7,000, not 15,000. If you are giving it before gift, it will be less. So if the base cost of ray is less, means ray has to pay more CGT in future if he sells the painting. But because they do not want to sell the painting, they are going to retain this painting. This will not be an issue for ray, because they are not going to sell the painting somewhere they have mentioned about paintings. Okay, it is a painting which we both love and would never sell. Okay, coming to the shares, this is a critical area. You need to do a lot of working here, and you need this information as well. So here they are going to sell entire share of 7,400 shares at 9.2. Okay, this was acquired on this date when Solace purchased the whole of the ordinary share of Beam. So they have given some information. At the time of takeover, 3,700 shares were owned, purchased for this price. They have also received 14,000 in cash. So they have received partly in shares, partly in cash. And ordinary share was worth 8.4 on this date. Okay. Remember, regarding share, they have clearly told you no gift holdover relief, no business asset disposal relief. Do not waste your time to figure out these reliefs. They've clearly mentioned you. Okay. And also, you should use the current market value for painting and shares, calculating chargeable gain. So now we'll go to shares. So shares, when we go, so if you are giving before wedding the shares, the raise base cost will be equal to the market value at the time of gift. That is 9.2 per share. If you are giving it after the wedding, base cost will be equal to the raise base cost for Ray will be equal to the Shanira's base cost, which is lower. So which one is better? It is better to give maximum number of share before wedding, because after wedding it's no gain, no loss. So it's not going to be much of a beneficial. But before wedding, if you give, you can utilize that gain. Okay. So Shanira would give maximum number of shares which she can give without rising to CGT liability. Up to the amount which will not give rise to any CGT, you can transfer before wedding. The remaining after wedding. If you see with the painting, there was an 18,000 capital loss. And with this loss, if you take the annual exempt amount, assuming annual exempt amount has not been utilized in this tax year, which is 6,000, so 8 and 16 makes 14,000. That means you can make a gain of up to 14,000 without incurring CGT. So now we'll go and calculate. What is the proceed? We are selling 7,400 share at the market value. The cost, there is a working to it. We'll go to that working here. So first you need the shares in Beam PLC. This was the share price at that time, and 7,400 shares we have sold. This is the proceed we have got, and in cash we got 14,800. Total proceed is this. Okay, this is a paper for paper. See here, entire shares we are selling, right? So entire shares we are selling, we need the cost of the share portion only. And in this we have cash also with shares. So we have to take it out. The cost of shares only we need. So that's why the proceed from the shares is this and the total is this, and this was the cost. Already they have given you. So this is the cost. 10468 which we are going to use here when we are selling the 7400 shares. And then we are going to get the gain, and that gain we are going to divide by 7400 share. So this is the chargeable gain per share, 7.79. How much gain do you need? 14,000, right? So 14,000 when you divide by this 7.79, why are we doing this? Because we want to find the number of shares. We are working backwards. We know the share price and we know the gain, but we don't know the number of shares. So we are working backwards. That's why we found this 7.79 by dividing the chargeable gain by 7,400 numbers that we have sold. So chargeable gain per share 7.79. Total gain has to be 14,000, but we don't know the number of shares. So 14 divided by 7.79, it is this 1797. So because it is 1797, that means out of what 7,400 shares, 1797 will be given before the wedding. The remaining 5603 will be given after wedding. You can work it like this and see 1797 into 7.79 and see that you are getting 14,000 gain or not. So this 14,000 gain will be deducted by 8,000 capital loss and 6,000 annual exemption amount, which is having 0. So that means you have to pay 0 CGT. So we are working this. That's why we divided 14 by 7.79. That's why we had to find this 7.79. That was the whole purpose. It's a little complicated because the examiner did not tell you exactly what you have to do. So that's it. So now we are moving on to the third next area, inheritance tax. We are done with CGT for both, for the house, painting and the shares. Now remember, your marks will be given for consistency. Okay, whatever the advice you have given in part B, first part of B, you told painting before wedding. This you have to stick in the second part also when we are calculating gain for shares, when we are taking the capital loss for painting, because we are going to give it before wedding. So you have to stick with it. Okay, so now we are moving on to inheritance tax. So the maximum. So this is regarding the gift of painting and the first tranche of shares made before the wedding. Why after the wedding you don't calculate? Because after the wedding, no gain, no loss. No gain, no loss. We want before wedding only, when we are going to have a gain. Because after wedding, it is exempt in inter-spouse transfer. For inheritance tax, anything you are giving after the wedding, it will be exempted in inheritance tax because inter-spouse transfer. So before wedding only. That 1797 that we are selling from shares and the painting. These two things will give you the maximum inheritance tax. And also that also, if Shanira were to die within 3 years, you have to talk about this death. You have to link this with the TAPA relief. Because if you die within 3 years of the gift, no TAPA relief. That is maximum. See the question, they told maximum inheritance tax. They didn't tell you minimum. Maximum means without all the reliefs and no IST for after wedding because inter-spouse transfer. So now we'll calculate. And also regarding the house, gift of house, what about this? You have to pay IST regarding this. Okay. Whether you calculate CGT planning or not, you have to give that. That will come. Because that was done before the wedding. Anyway, the tax year 23-24. So that will come. So now, first is painting 7,000. Now, how many shares? 1797. What is the market price? 9.29. So this is the total number of shares. So this is the transfer of value, annual exempt amount. We are only taking 24.25. Why not 23.24? Because on this date we have given a house, and we assume the house have used that annual exempt amount. So we can't bring forward the previous year 3,000. That's it. Now nil rate band 325. We have given a house. What is the value of the house? 360. It's a chargeable lifetime transfer in the previous 7 year. Annual exempt amount this and the previous year 6,000. So if you see this one is more than this, that means no nil rate band is available for you. On this you are going to pay 40% because you have not left anything to charity. So you can't reduce the IST to 36% also. This is your maximum IST that you have to pay. So now part C. Okay. Remember, for this one, if you are giving anything in marriage, there is a marriage exemption of 2,500. Okay. But this exemption, for this exemption, you have to get married. Gift have to be made for the purpose of marriage. Okay. Now C. This is about Kaylee's rental income in the country of Fulgur. Fulgur or anything. Whatever the way you want it to pronounce. So now, very important for you to see a residency and domicile. If they are not domicile, you have to see whether they're deemed domicile or not. The question told you the date when Kelly first became UK resident. See, there's a reason why they have told you, right? You have to see for how many taxes they have been UK resident. Because if they have been UK resident for a certain number of years, you have to see whether long-term resident deemed domicile rules apply or not. And this is an extract to email. Avoid any abbreviations. Okay. So first, we'll see. We'll read Exhibit 3. So Kelly is also high rate taxpayer. This is some information. Income is charged at 26 in Fulgur. No capital gain tax or inheritance tax. No double tax treaty between UK and Fulgur. Done. Now, so here's a house in Fulgur. Now, so he is thinking that for him to be charged in UK income tax, he has to bring the rental income to UK. If he does not bring the rental income to UK, he will not be charged UK income tax. That is his understanding. Okay. So now you have to see whether it's correct or not. Now, this is very important. She was born in 1991. Since then, he has been domiciled in country. He was resident in UK from 6 April 2021 until he moved on 1st Feb 2022, and then decided to return to UK on 1st May 2025. At which point I will resume UK residency. So if you see here, okay, D. Here, he has been UK resident for 15 out of the 20 tax years before the tax year in which the income arises. From 2001, if you see. If you take 20 years, it's to the 2021. Out of this 15 years, he was a UK resident, right? That's why he will be charged to UK tax. So that's why the rental income will be subject to income tax in UK because he's a UK resident. So even if he brings the money, remits the money into UK or not, doesn't matter. He's a UK resident. He'll be charged. Okay. So remittance basis will not apply for Kelly. Next, remittance basis will not be available. Why? Even though you are domiciled in Fulgur, you are deemed to be domiciled in UK for the purpose of income tax. See, this deemed to be domicile is very important. This you have to see. Even if you're not domicile, you can be deemed to be domicile if certain conditions are met. One, UK resident for 15 out of 20 tax years before the tax in which income arises. So this is the condition here. Now, you are going to get some tax relief. What is the tax in Fulger? 26. In UK, higher rate tax is 40. So the difference is 14%. You have to pay in UK only 14% of income tax. Why? Because of double tax relief. Your tax will reduce. You have to pay the lower of the UK tax or Bulgarian tax on the rental income. So before we come on to this, see, immediately don't say they are going to give 14%. Okay, most of the students jump to this. You have to come to here. To come to here, you have to build up your answer. First, you have to talk about UK residences. Second, you have to say about deemed domicile. Third, you have to talk about double tax relief because it's charged to UK tax. If he was not charged to UK tax, double tax relief, you don't have to answer this. What is the use of double tax relief if he does not have to pay UK tax at all? Because he has to pay UK tax, double tax relief we'll talk about. Okay. So this is how you build your answer. Now, moving on to the last part, D. This is a tax planning scheme. You have to give 3, and this is ethical question. Okay. So first we'll give 3. They told explain tax planning, tax avoidance, tax evasion, and actions that you have to take. Tax evasion. In different paragraphs you can ask. So what is tax planning? Using any rules in order to save your tax. For example, CGT relief. So give examples also. That is tax planning and is allowed. Tax avoidance, you are exploiting the loopholes in the rules. You are avoiding the tax. That means your objective is you are using the legislation but not for the intended purpose. This is not allowable. Tax evasion is illegal. This is the most dangerous. You are not following the tax rules. For example, you're hiding income, you're falsifying expenses. Wherever you can give examples, give examples. So now, those 3 are done. These are the 3 actions that you have to take. They told what actions you have to take. First is always investigate details. What scheme it is. Is it tax planning, avoidance, or evasion? Second, see, we don't want to go by the tax planning. Because if it's tax planning, then no answer. Then nothing to do. Problem comes when it's tax avoidance or tax evasion. So the second will be, if the scheme is this or this, you should advise Kelly against using it. Don't use it. If still, if we think that the proposed sophisticated tax planning, see, tax planning could be sometimes very sophisticated. That means it would amount to aggressive tax avoidance or tax evasion. Then, still, if Kelly insists on using that tax planning, you must resign. See, that resign comes later. First, you advise the client. If he doesn't listen, then you resigned. Okay? Because you cannot be involved with tax evasion or avoidance. Next, after resigning comes inform HMRC. After resigning. So this has to follow an order, and this order is fixed always in ethical question. You have to follow this order. First, we advise if they do not listen, then resign. Then after resigning, inform HMRC and do not give reasons. Don't only inform HMRC, do not give reasons why you are resigning. Okay. So for this, usually you don't need the case study because it's a question which is based on your knowledge. If you read also part D, there is not much given in exhibit 3. They just have told that some sophisticated tax planning. They want to release a UK tax liability. So basically they're telling you the difference between this thing. Much has not been given. So make sure that you've used entirely all the exhibits has been used in your answer. You can always go back and check. So now I would like to tell you the examiner's comment areas on which you need to pay more attention and where students often have gone wrong. Okay. Now, if you see this question has CGT, IHT, this often you will see in your exam. Okay, in ATX often ask the mixture of IHT and CGT, especially in question number 1, section A. So you have to be prepared for it. Now, so if you see part A, okay, most students, what did they do? They started calculating income tax, whereas you have been given the income tax here. You see, you have been given the income tax here. They start calculating income tax on the profit. So do not waste your time doing that, because taxable profit and tax has been given. Now the question in fact is asking you, testing your knowledge that you have to pay income tax via self-assessment. This is what they're asking, not the calculation of income tax, that you have to pay it on account, payment on account. Okay, if you see this question was not done well. Now, next, second part, where you are taking reinvesting the profit in the purchase of inventory or additional equipment. So most candidates were able to identify that drawings were not relevant. It will not going to impact your profit. But coming to equipment part, they were able to explain it, but the inventory level was not done well. Okay, because most common error was they told that when you purchase inventory, it will reduce your taxable profit, which is not the case. But equipment part was done well. And regarding VAT, the voluntary registration, here also most students have done it well. And first, the next part of VAT was, it was a pre-registration input tax. Okay, this was not done well because students did not state that it was a pre-registration input tax before you start trading. Now, so part B was about capital gain tax and inheritance tax before and after the marriage. And here, most students were able to identify that gifts before marriage were at market value and after marriage no gain, no loss. But they were not able to apply this knowledge to the question. And also, they were not able to give a clear answer, the impact on the donor's base costs. Okay, so two things candidates should have recognized here. First one, painting. Regarding painting, this is at loss, so it should be given before wedding for you to utilize the loss against the gain. Number one is this. Second, in order to create a higher base cost for the share, give it before the wedding, even the shares. But only to the extent that gains will be covered by the loss on the painting and the annual exempt amount. that is 14,000, and you have to calculate the number of shares also. This was not done well. So now second part, inheritance was done. This was done better compared to the rest of the question, but they were able to. You have to take care of the annual exemption amount and available net rate band, and also the spouse exemption. Okay, interspouse exemption. This has to be done. This you have to take care in the inheritance tax. Part C is about overseas. Now, most of the candidates were not able to identify that it was deemed domicile. They told they will not be taxed in UK because they were not UK domicile, which is incorrect. That's why you need the ATX to see ATX deemed domicile and all are explained in ATX in depth. You need this knowledge. The deemed domicile knowledge you need it. It's explained in ATX, not in tax. So now we'll go to the marking scheme. If you see the marking scheme, okay, so I'm not going to give you the marks, but I'm going to give you the marks for first part of A, class 4 NIC, calculating class 2 NIC. See, there are no marks for calculating income tax, okay? It has been given to you, that's why. Payment and dates, then non-withdrawal of profits, that is equipment and inventory. Next part, information that you are required, that is how much you have paid in LOC for the house, and input tax in respect of computer, whether you can recover or not. Pre-registration input. Coming to B, you are going to get, this is for house, CGT, calculating the CGT correctly. Then you need information required, that is double tax relief, and any other information you require, and also the due date. You are going to get marks. Then for stating painting before and shares after, some part of the shares are before and some are after. For giving that reasons, you are going to get marks. So rational, for retiming of painting and shares. So next, now you will calculate painting, the loss on painting, and then shares. You will explain. Nothing to explain in painting, is just a loss, and calculate. Then in the next one, you will explain and calculate. C, that is overseas. So what is the basis of taxation? Remittance basis or not remittance? And calculating. That is taking the lower 40 and 26, the difference. Next is ethics. So ethics is first is tax planning, tax avoidance, tax aversion, one mark each, okay? And then you have to say that you have to investigate the scheme. It falls under which category? Then you have to advise against this two. avoidance and aversion. Then you resign. Then you inform HMRC without reason. This is the order you have to follow for ethical question. 1 mark each. And professional skill marks, you are going to get 10 marks. See, for communication, mostly if you write it in a memo format, you will get it. Okay. And for analysis and evaluation, you have to use the information to determine the resident status of Kelly, to calculate the CGD and IHT and NIC, and skepticism by recognizing missing information for race business for VAT purpose, and of identification that the tax in HelloC needs to be quantified, and commercial acumen will show by your customers who are not registered for VAT. They might not be willing to pay VAT. And second, by identifying that you are going to give the tax-free amount before the wedding. Okay, that means the shares of 1797 that you have calculated, you will give before wedding, so that you utilize the gain, chargeable gain of 14,000. So that's it for this. I shall see you in question number 5. You can see my previous question, that is question number 1, 2, 3. It's there on the playlist. But question 2, 3, from 2 onwards, only members of my YouTube channel can watch it. And question 1 is available for all the subscribers of my YouTube channel as a demo. So thank you and take care.